Good morning. You're listening to National Real Estate Auction Radio. I am your host, Doug Dennison, and we are broadcasting from beautiful St. Augustine, Florida, the nation's oldest city at WFOY 1240 AM studios. Through the power of the internet, this program is being streamed worldwide on 1240news.com. The show will also be archived on RowAuctions.com, as they are the host of this program. Additionally, this show will be posted on YouTube.com. We're going to be talking about real estate auctions, past auctions, upcoming auctions, different real estate markets across the country. We have a lot of topics today. To help us out, we've got some people calling in, some VIP experts from all over the country. The mission statement for the show is to provide an educational experience for listeners in a promotional format for auctions across the country. We are listened to by real estate investors, real estate brokers, bankruptcy attorneys, bankers, government officials, real estate media, and of course, the all-important thing is the general public. Again, we're trying to educate about auctions and also to provide promotional format for auctions across the country. I'm Doug Dennison. I've been an auction project manager for real estate auctions for about 25 years. And this is mostly in the area of the government, bankruptcy, banks, large deals. That's my specialty. Anything from being an auction project manager for 1,800 properties in Texas for 5 or 6 banks that we did several years ago, to Florida when we did 2,000 properties, all online, by the way, for Sarasota County and the city of Northport, Florida. To bankruptcy, just about a year ago, did a bankruptcy deal in Miami, Florida, for a shopping center that gained $21 million for the lenders, and also I think it broke records. I haven't checked on it yet, but there was 161 different bids that day, which is pretty unique and very, very interesting. Our sponsor is Row Auctions. They are a firm that started in 1936. They do online auctions, on-site auctions, and ballroom auctions. They have offices in Florida, New Jersey, California, Georgia, and have alliances with auctioneers and real estate brokers across the country. They do government auctions, bank auctions, bankruptcy auctions, and much more. They have a big auction schedule coming up, so check out their website at www.rowauctions.com, or you can call them at 800-323-8388. They're a national firm, a good firm, and let's go to our first caller. Whoop, just lost him. Hopefully he'll call back. Again, Row Auctions. That's www.rowauctions.com, or telephone number is 800-323-8388. That's 800-323-8388. I'm Doug Dennison, your host. Let's go for a quick break, and we'll be right back.
MarkNet Alliance is a national, membership-based network of 41 auction companies. Our companies are successful auction professionals with proven track records and thriving businesses. The MarkNet companies have a staff of over 540 employees who are working hard every day to meet the goals of their clients during our ever-changing economy. MarkNet companies are able to achieve these goals through cutting-edge technologies and ever-growing investor pools. To view the hundreds of auctions currently being conducted, or for more information, visit marknetalliance.com.
All right, we're back. I'm Doug Dennison, your host of the National Real Estate Auction Real Estate radio program, and I have been up to Washington, D.C. the last few months. There is a push by President Obama which he started out actually probably the State of the Union address, which was January, February of last year, talking about selling surplus properties and helping the budget. He followed that up with a very important budget address. He did it in Baltimore. I want to say it was like February 13th or February 14th, where he said there was 16,000 properties that we could sell that are unused that we could sell to help balance the budget. These are not houses, by the way. These are office buildings and warehouses. Let's go to that caller. Good morning. You're on the air.
Good morning, Doug Dennison. This is Rosendo Cavedo.
Rosendo, how are you doing, my friend?
Beautiful for Friday morning.
Well, good. Tell us again who you are, where you're from, and what do you do?
I am. My name is Rosendo Cavedo. I am with the real estate firm of Cushman and Wakefield, the largest privately held international real estate firm in the world. And for the last 21 years, my specialty has been the sale of multifamily, which means a couple of things. One, the sale of existing apartment buildings, preferably from 50 units and greater.
Mm-hmm.
Fractured condominiums, again, preferably 50 units or greater.
What is that for our general public? What is a fractured condominium?
Fractured condominium is where a building that was designed to be sold, where units were supposed to be sold individually, and for example, let's say it's a 200-unit building, and only 50 of the units got bought by individual people. You have 150 units left to sell.
Mm-hmm.
Typically, either the developer or, in some cases, the lender will retain us to sell the 150 unsold units in bulk to one buyer.
How does that work for people that are already in there? I know that must be a headache for them.
It could be very, very good, but of course, there's always some apprehension.
Mm-hmm.
Good in the sense that when you have a new buyer buying the bulk of the units, they will be investing in the property, and in most cases,
mm-hmm.
say 95% of cases, they will improve the quality of the building, the quality of the people that are going to be living in that building, and keeping the building afloat.
Mm-hmm.
However, there is some apprehension. Why? If I'm the owner and I bought my unit back in 2007 at the height of the market,
yeah.
What this investor is buying, the 150 units, will be on a per unit basis much less than what I paid. So that's one concern. The other concern is when a bulk buyer buys it and their intention is to rent, many people who are owners don't want to be associated with, quote, renters. They fear that the renters may bring the building down,
mm-hmm.
maybe a different profile of people, different class of people, etc.
Mm-hmm. Wouldn't take care of the unit as well as an owner.
Exactly.
Okay.
But generally, it's for the better.
Okay.
Much for the better. And in some cases, the bulk buyer may decide to buy out the remaining owners,
mm-hmm.
and revert the property from condominium back to rental apartment.
Mm-hmm.
That has not happened, as far as I know, here in Miami or in Broward.
Okay. My father always talks to me about he went over to Fort Myers a year or 2 years ago, and there's this big condo project, and he went by at night, and there's one light on, and I'm guessing that this buyer kind of figures that the bank or whatever would rather get him out because he bought a condo, and they would rather turn it into rentals or whatever. But there he is, and I think it's been in the paper too, where there's one guy or just a couple of owners, and there's yet another 100 units that are not even touched or not even being used at all. Do they have kind of a leg up, or what happens in that kind of a deal?
Hopefully you'll have a white knight that comes in and buys the remaining units and gets the property filled with people. Because again, if you think about it, if you only have a minority of the units sold,
Right.
which means you're only collecting a very small fraction of
Right.
the homeowner association fees, how much longer can the building, go in terms of having the proper maintenance and the property security, etc. So it is a very difficult and challenging situation for those owners until somebody buys out all those units in bulk.
Right. Right.
And again, many times, the majority of the times, a high percentage of the time, it's the best that can happen to those types of situations is for a new buyer to come in and buy all the bulk units.
Well, I have done some of these fractured deals, and they're difficult. And I know you've done several of them, and you're very good. I think you have to be an upper tier professional, which you are certainly down in that South Florida market, specifically in the multifamily, where you know the ins and outs and are able to deal with investors who they're going to ask, of course, how do I do this, and am I responsible for all of the fees and all this kind of stuff. So my hat's off to you, and kudos to you for being in this field. But you know what? You're in a real good field right now, aren't you?
Multifamily is hot, especially down in Southeast Florida, and particularly in Miami.
Just crazy. Tell me why that is.
It's surprising to some people that it came so soon. I'm not surprised.
Mm-hmm.
When you look at the location of Southeast Florida, particularly Miami, the attraction it has internationally, and of course, the warm climate, the newness, the cheekiness of it. I'm not surprised. And again, we're running out of land, and we got miles and miles of beach, and you're not too far from the Keys, you're not too far from Bahamas, etc.
Mm-hmm.
I'm not surprised. And what was really interesting is that during the boom, when many of the existing rental properties were being converted to condominiums, we lost about 20% of our apartment inventory, which equates somewhere about maybe plus or minus 100,000 units out of a total maybe 400,000 units in the pool.
Mm-hmm.
And out of that 100,000, maybe 20,000 was replaced, if that. And that 20,000, most of that was affordable housing type structures. So here you are, fast forward to 2012, and if you want to live in a luxury rental community, there are very few.
Yeah.
Well, why? Because those were the first ones that got acquired by investors to convert to condominiums.
Mm-hmm.
And then you go to the second tier, your B product, product built in the 90s, and most of that stuff, a lot of stuff got converted to condos. So, and there's demand. There's a lot of demand for luxury type of housing, particularly in the central business districts of Miami and Fort Lauderdale. Many of the or several of the large REITs are focusing just on the business district in terms of either buying or developing rental communities. And then if you think about it, if you're used to own a house and either you lost it or you lost value on it, you may be a little gun shy about buying another house.
Yep.
So therefore, what do? You in the meantime, you rent an apartment.
Yep.
But since you're accustomed to a certain lifestyle, a much higher lifestyle, you would want to live in a nice luxury rental community, either on the water or in the downtown areas. And people are getting away from the suburbs; they're coming in, where a lot of things are happening, particularly again in Miami.
Tell me about, and again for the general public and some of our residential real estate brokers listen to this program. You talk about A product, B product. What does that really mean, and how do you determine that?
I guess first of all, it's a very subjective type of classification.
Okay.
But if you can visualize a relatively new, less than 5-year-old property,
okay,
and just a prime location,
okay,
i.e. the water in the downtown, or it could be in the suburbs, but it's just a very nice, very good location, safe, good schools, etc.
Mm-hmm.
And typically, the A properties will have, of course, in addition to the location, will have, a gated security, a host of amenities that you normally wouldn't have in a B or a C type of product. Like a clubhouse, a business center, parties, on Sundays for brunch, and just a professional leasing staff. Nice units with granite countertops, top of the line appliances. You may even have some very nice marble tile in your living areas. So that's kind of like what the A product is, just very high end, very very well located. Then your B product is what A product used to be years before.
Uh-huh.
Maybe it's a little tired. Maybe the area has changed a little bit. It's not as chic or as good as it used to be, but it's still a good product. There's nothing wrong with a B product. Like many investors would like to buy a B product and convert, assuming that the location is good.
More upside, maybe?
Absolutely, yeah,
okay.
Absolutely, because the cost of replacing that product today is far exceeds what you can buy them for.
Okay.
And then your C product is more, areas are older, the properties are probably built in the 70s, 60s and 70s. Those are really tired. The neighborhood for sure has changed. It's more of a blue-collar, working-class type of neighborhood. And again, now there's nothing wrong with it. It's just an older product, an older neighborhood.
Rosendo, right before you came on the show, I was kind of talking about my travels to Washington, D.C. in the last several months, and this was all about the fact that the government has surplus properties that they want to sell from the president on down, and Congressman Jeff Denham has a bill, H.R. 1734, that he's pushing, and I'm all in support of, that tries to get the Congress, which to get the Congress to do anything now these days is pretty difficult, as you know. But they're trying to sell these surplus properties. These aren't homes, condos. These are government warehouses and office buildings and land. And you and I have done a lot of work together with RTC, Resolution Trust Corporation auctions, FDIC auctions, bankruptcy auctions. So you're very, very involved with the government sales and have done a fine job, and I've reached out to you several times to be my partner, and you've thankfully asked me to help you several times. People don't understand that a property that isn't being used, or most people don't, is deteriorating badly, and it's costing the owner money. And in this arena, we're talking about the government, which is really us, the taxpayers. And I'm gonna read you an article, Rosendo. It says one property already drawing attention is the old post office annex in Washington, D.C. The facility loses $6 million a year, yet it hasn't been used in 10 years. Denham says Donald Trump and the Waldorf Astoria have expressed interest in buying the annex to use as a commercial venue that creates job and actually makes money for the taxpayers rather than us, paying for it. What's your take on this as far as properties? Do they go down in value? Do they cost money when they are not being used? And certainly, you dealing in the distressed market at times, you know about this.
Yeah, you're absolutely correct, and we see those buildings all the time. And you say, well, I wonder why they haven't done anything with that building. Well, it belongs to the government; they're not using it. Well, I think from the federal government down to the local level, every kind of government may have properties that they're not going to use or plan on using.
Mm-hmm.
You know, one way to start, I guess, reducing the budget, whether it be at the federal, state, or local level, is selling these properties.
Right.
There's no sense holding on to something that you haven't used for several years or don't even plan on using it.
If you're a businessman, I mean, it's a no-brainer. You'd sell it to get rid of it, bring some money into the till, but more importantly, you don't have to pay those security costs and insurance costs and all that kind of stuff.
Well, what also happens, it negatively affects the neighborhood, the values in that neighborhood.
Yes.
You know, so rather than, for example, in your case, in the example you gave about that post office in D.C., rather than having just an empty building and heaven knows, is there any, people living in there or writing graffiti on the walls,
right,
or breaking into the property and doing what have you in there, and then of course once you get some type of element or elements, in a building, an empty building, abandoned building like that, it starts affecting everybody, the people around you. So, visualize now that building being acquired by an investor, an entrepreneur, and turning into whatever, a wholesale type grocery store. Well, all of a sudden now you got traffic, now you got people, you got things happening there. It's a place to go and buy something, if it's going to be a grocery store or what have you. So that. And of course, and again, it raises the tax value or raises the market value of property for tax purposes. And now the local agency is collecting more real estate taxes.
Well, if the government owns it, then you're not receiving any kind of taxes. So, absolutely, once you get these the private sector in there buying it, now you've got somebody that's going to upgrade the building and pay taxes to the local municipality. But I could go on for a long time on that. Give me your 1-minute spiel. What's going to happen in 2012?
2012, locally in South Florida, the nation?
Why don't you do locally?
Locally, okay. From a local standpoint, I think from all the food products, as we call them, multifamily is the one that has beginning to get attention and will have most of the attention for the rest of this year. There is a lot of interest in developing. Again, and where we wouldn't use that word 2 years ago, there is a lot of interest in developing, and also in developing condominiums, if you can believe that. And what's even better is that there are now financial institutions that are willing to loan.
Rosendo, I've got to go for a 30-minute break. Can you hold on a little bit after the 3-minute break? Because I want to talk to you for a brief second later. But right now, give us your website and contact information.
My contact information, my phone number is 305-533-2877. And our way of information is, CushmanWakefield.com.
Okay, perfect. We're going to go for our 30-minute break, and we're going to have you right back. Hold on. I want to talk to you more. And Rosendo, thank you so much for spending time. I think I could talk to you for about an hour on this whole government thing, but let's go for a quick break.
Come on out to the St. Augustine and St. Johns County Flea Market where the fun begins. There's old, new, and unique items every weekend. Bargain basement prices and something for everyone. Just in time for Christmas shopping. There's a great farmer's market and Charlie's Famous Barbecue. You haven't had barbecue until you try Charlie's, and you won't find better baked beans. Churches and charities get a free booth 2 days each month. Business owner display 50% off rental prices. RV parking and outside storage, the best prices in the Tri-County area. Second month free on outside storage. Every Saturday and Sunday, the St. Johns County Flea Market is open from 8 a.m. to 4 p.m. State Road 207 and I-95.
You'll thank heaven for Papa Lock.
Uh-oh, accidentally locked yourself out? Lost your keys? Need replacements fast? Call Papa Lock of St. Augustine, 940-0000. With 4 vehicles servicing the St. Augustine area, we've always got a locksmith available. We can make keys for your home, your car, your business, your motorcycle, your RV. Just give us a call, 940-0000.
No matter where you are, when you need a little help, call Papa Lock. Oh, yeah!
Meet St. Augustine native Robert Hall.
Name of the company is Hall's Lawn Service, Handyman Pressure Washer. We do a variety of work, any type of repair for a home, lawn, sod, and we try to take care of everybody as they are family. If you need a light bulb screwed in, we do that. If you got a sink stopped up, we'll help you with that. If you need sod, we'll put sod down. And we maintenance year round. All materials is warranted by the companies that we purchase it from. The sod comes from our field. So we come from the field growing our own sod to your yard and give you the right service. So we do a lot of commercial too. We're licensed, insured, and bonded. We try to treat the people right and make sure they have a family feel to everything. We're not after just $1. But you can contact me personally by my cell number at 315-3277 or my home phone number at 692-1918.
Hello, St. Augustine. This is Jim Aselta from Mortgage Market on US 1 South. 2012 is upon us. Are you all as tired as I am, waiting for the government to fix things and make life better? Well, the wait is finally over. Just stop waiting. We need to fix things ourselves, and we have to find our own work and investment opportunities. We need to spend our earnings smartly and plan for our own futures. But unofficially, I'm excited and optimistic for a much improved economy in 2012. Here in St. Johns County, house sales are up, foreclosures are down. But either way, I'm planning for a great year. So when planning for this wonderful year, remember Mortgage Market will do the lowest interest conventional loans, and if needed, private lender loans with relaxed qualifications for the self-employed or tough credit borrowers. Call Jim or Nick Aselta, 794-2880, that's 794-2880, and let Mortgage Market help make this your best year ever.
Okay, we're back. This is the National Real Estate Auction Radio Show. I'm your host, Doug Dennison. We have Rosendo Cavera on the line. He is the man in South Florida if you are thinking about buying multifamily. Rosendo, you still with us?
Yes, I am.
Well, thank you so much for staying on for a little bit longer. I just want to express my thanks to you and our 20-year friendship. 20, maybe more than that. I'm afraid to say that. But
you're dating us now.
But we have had some great real estate auctions together in the Florida area, and you have always been that professional that I could count on. Give us your telephone number and maybe your email address too, if you would. I want people to know that you're the man to talk to if you're talking multifamily in South Florida.
Thank you, Doug. My direct line is 305-533-2877.
Do it one more time.
305-533-2877.
Very, very good. And thank you so much for your comments on the government surplus property. It gets a little frustrating at times. I've had great meetings up there with senators, with government officials, but I think as taxpayers we have to realize, and you did the great point in regards to it's just not the federal government, but it's state, it's local, it's county. But thank you so much for calling in, and my friend, we look forward to working with you in 2012.
Same here, Doug.
Take care now.
Look forward to it. Thank you.
Yeah.
Bye-bye.
You're on the air.
Hey, Doug, Craig Haskell here. How you doing?
Oh, I'm fine, Craig. Tell us, number one, what you do, where you're from, and give us your name and company.
Awesome. My name's Craig Haskell. I'm the founder of the ValueHoundAcademy.com on the internet, where we help entrepreneurs, real estate investors, start and grow the real estate business. Because, as you know, this is a great time to capitalize on the real estate market, and we're value investors. We uncover value, we create value, and we help them achieve that. So we've been on the internet for about a year. We've been interviewing some of the leading real estate entrepreneurs and investors around the country and finding out some of the things that they're doing. How are they raising money for their deals? How are they uncovering some of these great properties? What strategies are they using in the marketplace? And so that's kind of who I am.
What's your background, Craig?
I've been in the business for about 30 years. I've owned and I still own a management company, investment company, as well as a training company. We probably bought and sold over 7,200 units throughout that period of time. I also have a consulting business. I help some of the top companies around the country fix problems. I'm kind of known as a turnaround specialist. So I've been doing that for about 30 years.
Well, give us your you've got 2 websites, I believe. Give us both of those websites. We'll go back to that, but I want to make sure that we don't forget, because Craig, you're really a VIP in this area. That many people go to your website. They listen to your webcams, and you have only the top people on your show. Tell us your websites first of all.
Well, the first one, my overall company is HaskellValueGroup.com, where that's kind of the umbrella company. We do a lot of different types of things. My actual training company, where a lot of the interviews are, it's a free membership. It's called ValueHoundAcademy.com. And like you said, we interviewed some of the top people. We've interviewed people like the DeBartolo Development, who did $1 billion last year. We did Jerome Fink, Bascom Group, same thing. They're one of the biggest multifamily investors. So there they can learn lots of ideas. I know you've been on some of the webcasts, and we're talking to some of the leading people, and just find out what they're doing. What are some of the challenges they're having? What are some of the opportunities? How are they making money in today's environment?
And what's the website for the Value Hound Academy?
It's called ValueHoundAcademy.com.
Okay. Nice and easy. And it's a free membership, is that correct?
It's free membership. There's a free premium, but you can get all the information you pretty much need just with the free.
Okay.
But if you want to listen to some of the interviews, you can download them, and that's a free. It's only $4.95 a month.
That's excellent. Very good. I asked you on not only for your expertise, but kind of give us your analysis of 2011. What do you think happened in 2011 on a national basis in real estate? Because it's been a very interesting year.
Yeah, 2011, it's interesting because I'm in the process of writing an article about all the interviews or what are some of the things that happened in 2011, things that we've learned. And if you look back in 2011 really will be seen as the bottom of the real estate market, because if you really look at what the fundamentals are in real estate, it comes down to supply and demand or inventory. So you look back across all the different sectors, apartment, office, retail, and industrial, for the most part, we finally had the first year of positive absorption, which means, for those who don't know what that means, we were actually renting out more space or more units than we were building new supply, and that's over a trend of probably 5 years. We finally stopped that trend, and we expect going forward that will continue to improve. So 2011 was the bottom of the year. Some of the things that some of our investors have been doing to be successful in this marketplace is probably one of the biggest things that I looked at all the different investors. One of the common themes was they're all focused on one business plan. They're all focused on one strategy. And you look at, for example, we had Carlos Vaz. Carlos Vaz did like 3,000 units in the last couple of years in the market of Texas. He's an apartment guy, and he focuses on apartments. And he told us that, hey, if someone brings me an industrial deal or a self-storage deal that has a 30 IRR, I'm not going to know how to underwrite that. I'm probably not going to do it. I'm going to just stay with my 15% IRR because I focus on apartments in a few cities in the state of Texas. And another big thing, too, just another common thing that we found is that relationships are critical to building their investment pool. And not just in as an investor, but as a broker, as any business, really. Relationships are really at the core of everything. And these investors have built such great relationships with people, whether they're special servicers or they're some of the property owners or some of the brokers. They're able to find some of the better deals, and they're able to buy more properties when others were struggling to try and build their portfolios. They're able to raise more money because they have those strong relationships. So at the really core, there's probably 5 things I'm going to write about, but those are the 2 biggest ones that I found that all of them are using to be successful with their business.
Well, in the last downturn, you would see properties, and I'm going to talk about banks that failed, savings and loans that failed. Usually in in that type of downturn and those kind of opportunities, you would have a bank that might have failed, and there's basically 200 properties that need to be sold, and I did a lot of that, but they were all within like 50 to 100 miles because that's what they did, and that has so much changed compared to today's, where a bank will go down and they'll have maybe those same 200 properties. I'm talking about a very small bank, of course.
Right.
But they're all over. They're in 16 states. It's nuts. So how does an investor, which usually you would think, and maybe I'm wrong, but doesn't a real estate investor, just like the guy from Texas, he's got his staff in one area, he's looking for that area, looking for that product type, that's what he does. How do you go from, okay, having 4 of those properties in Dallas, but then if you can have an opportunity to buy 3 more, you've got to pick up something in Idaho. That is a very difficult thing. So how do investors deal with that?
Well, I would say it depends on the type of investor. For example, you have the large institutional, large companies that are in different markets,
okay,
versus a small private guy that's just in his local market. He's just trying to get a deal or two.
Sure.
And for the small guy that's just trying to get going, he really needs to focus on his local market. He needs to be an expert on a certain marketplace, a certain property type, and a certain strategy. For the bigger guy, the institutional and larger developers that have offices in these bigger markets, they really need to build those relationships with the brokers. And we talked with Sean Dalphin America Corporation, who did about 1 million square feet of industrial buildings here in the last market. And believe it or not, they bought a lot of the properties through the auction process. And Sean told us it's kind of addicting to get involved in that auction process. You keep bidding these things, feel like he was in Vegas, just trying to get his deal. And so you really have to put yourself out there and build those relationships at either the local level or the national level.
Well, it's a great time to buy, just like you talked about, if we're at the bottom. And this is where, in the last downturn, many, many, many millionaires were made. And the strategy is buy low and then, sell at the high point or a higher point. And there's a lot of opportunities for investors, and auctions are certainly one of them. Relationships is just key, just exactly what you said. And if I'm betting that, because you're the type of guy that I know you are, in that last downturn, you still have a lot of those relationships that you're dealing with now, and that's just a wonderful thing, because they trust you and give you input and give you advice, and so I agree with you completely. It's a wonderful thing in regards to relationship. What's your crystal ball for 2012?
Well, Doug, I really think that as we go forward, we have bottomed out in the real estate cycle. So the fundamentals are finally on our side. We're value hounds, and we really haven't seen these types of great buying opportunities for a long time. In fact, a lot of value hounds were on the market for a while. In the last year or two, they've been aggressively buying. We continue to see that going forward in 2012. The only thing that's really going to hold us back is the economy. What happens to the economy? We're growing, albeit slowly, but we think that in 2012 it's going to continue to grow slow. We have the after effects that are going on in Europe, which have a lot of the banks are struggling right now. The big one is that Germany is the biggest driver of that European group, and they're starting to struggle. Looks like they may go into recession. So I think that affects us modestly. We're ahead of them. We're starting to grow. So I think everything that's going on in 2012, we start to continue to grow, but we're going to be at a slow pace. I think 2013 is when we really start to generate some growth. If for some reason our economy takes off and we really start generating some jobs, I think you're really going to see the real estate market jump. You're going to see a lot of new development get in the game. You're going to see rents go up. So, but our forecast is that it's a slow growth in 2012.
Well, in my opinion, what I've seen is that most people are followers, and that if the word is that the market still might go lower. I need to sit on the sidelines and wait because, buying a big pool of properties and then finding out they went down 10% in a few months, that can hurt. So they were sitting on the sidelines, and conversely, once the feeling is like it bottomed out, and now I've got to get on before I lose all these important bargains, I got to do it real quick. You see like an explosion of people not doing anything, an explosion of people doing stuff. Is that similar to your thinking?
No, because real estate's not the same as the stock market. Stock market can turn on a dime. Real estate is a long process, and in fact, you don't turn around a cruise ship on a dime. That baby's got to take a big old wide turn, and so that's what happens in the real estate market. So all you got to do is get on the right side of the trade here in the real estate market, and it's going to be slow growth. For example, rents in many markets of the country have only gone down 20%. But values have gone down 50%. So these deals cash flow better than they did before. So you can get on these properties, even if the price goes down a modest, few percent. You're still going to have a deal at cash flow. So when the market does turn around, you're going to generate the increased rents, the increased value through the growth of the NOI.
Got it. Well, that's why I have you as an expert on the show. Tell us, is there any one segment that if you were an investor, you would focus on in 2012?
Well, it depends on where you are, what kind of strategy you're trying to use. If you look at, more of a shorter-term strategy, I think the apartment market right now is the biggest hotbed right now because everybody needs a place to live.
Yep.
You have shorter-term leases. Rents have been going up quite a bit. Vacancy rates have been dropping. They're starting to build again. It's the most healthy sector in the real estate market. Another one, the long-term cycle. I really like some of the office stuff. It's rents are going to continue to go down because leases are rewritten as years go on at a lower rate because they're longer-term leases. But there's a lot of opportunities if you can find in some of the really good markets to find value. Things are really discounted because that market just got slaughtered. I think those are the two markets for different reasons.
Again, upside for the office buildings, you think, but for
long term,
long term, and for apartment buildings, it looks like it's a continued rise.
Yeah, because apartment buildings, you can get into the apartment buildings and you can actually buy those things right now, and you can factor in your performance some increase in rents. Well, a lot of the other ones you're actually forecasting decrease in rents. So that's why I think it's more of a short-term play. I mean, it's going to be a long-term play as well, but if you want to get in quicker, it's an easier way to make money and not have to worry about any risk or as much risk. Well,
Craig, you are a welcome VIP guest to our show. You've been on before and done a fine job. Tell us again, where do people contact you and get on to your real estate investor grouping?
Yeah, my name is Craig Haskell. You can call me at my office here, or the best way is to get a hold of me on email. It's Craig at valuehoundacademy.com. Or give me a call here at the office at 623-582-9766. Our website, obviously, is a place for people to get information about capitalize on this real estate market. So there's a lot of free information, and we've gotten a great feedback from it.
You've done very well. I appreciate it, Craig. Thank you so much for calling in on a Friday. Again, continued success, and I thank you on behalf of the real estate community on giving such good advice for the rest of the real estate community.
Awesome. Thanks, Doug, for having me on, and good luck in 2012.
You bet. You take care.
Okay, bye-bye.
Bye-bye. Good morning. You're on the air.
Good morning, Doug. It's Jerry Day, Rowell Auctions.
Jerry Day, thank you so much for calling in, and tell us a little bit about Rowell Auctions, Jerry.
Well, Rowell's a 75-year-old firm that's been in the auction business for about the last 40 years. They started off primarily in the agricultural marketplace, but as the market changed, they've evolved into major sellers for insurance companies, government, and financial institutions, in addition to their traditional business.
Well, you have a lot of experience. You've been in the business for probably the same amount of time that I have. tell me what you see from 2011. What was happening with auctions, and particularly with RAL auctions?
Well, in 2011, we saw a fair amount of bank activity and also individual activity. The bank activity selling things that banks have as special assets.
Mm-hmm.
That could be anything from a bank branch to undeveloped lots to office buildings, single-family residential assets.
Mm-hmm.
Also, the RAL firm saw a fair amount of activity this last year in the sale of agricultural properties for estates, individuals, and businesses.
Well, excellent. RAL Auction is part of MarkNet Alliance. Give us a little bit. Why is MarkNet Alliance a great group to be involved with?
Well, the MarkNet Alliance, Tommy Rowell was one of the founders of the MarkNet Alliance, and the idea was that in banding together with a number of medium-sized auction companies around the country, we could offer a superior level of service to the sellers and the selling and the buying groups.
Well, they have done a great job. In fact, they hit a record last year of having more than 1,000 auctions on one particular day. If you go on their website, marknetalliance.com, and that makes it a go-to site. That makes it, where you want to go to if you're a real estate investor and find out where all these potential bargains are, and that's why people go to auctions to try to get a bargain, of course, and the fairness and the transparency of an auction. But MarkNet has done extremely well in that area. You have been somebody that has really helped RAL auctions progress to the banking area. And particularly, you just had an auction in December that was all absolute. And when I say absolute, for our general public, that means it sells no matter what. Tell us the value of absolute auctions.
Well, an absolute auction is extremely critical if you want to get the highest possible price for an asset. And the reason I say that is that an auction environment, its success is typically determined by the number of participants. In today's marketplace, investors can pick and choose as they wish, and they are not going to spend the time necessary typically on a large batch of assets to review those assets unless they know that they will be trading on those assets in a final position. In other words, when we say it's sold, it's sold. Investors are prepared to do business on that basis.
So they're going to focus on the absolute properties compared to another auction that might have the same kind of properties, might even have better properties, but they don't know if they're going to sell or not. Is that it?
That's it. In a statistic that we have developed over the years on absolute auctions versus reserve, the number is 14 bids typically on a reserve auction versus 55 on exactly the same asset.
Wow. 14 on a reserve and 55. And this is a lot of statistics from online auctions. Is that correct?
That is correct. The online auctions offer the seller a level of transparency that you can't get anywhere else.
Well, Jerry, if you're coming to me and I'm a bank, I've got to answer to the board and my boss, and you're going to come and say, you need to do it absolute. How do you convince them? You have done something that's great and kind of give them a feeling of comfort through analytics. What is analytics, and what do you do?
Well, the analytics are some of the most important parts of the services that we offer, and basically what analytics are is the extracting of information from large databases, or it's called data mining now, and it basically bridges disciplines of computer science, statistics, and mathematics.
And if I'm a banker and you're convincing me that I need to sell my 200 properties absolute, what kind of material are you going to give me that I can say, okay, I'm in. I'll do it all absolute because I know it's the best way to go.
The first thing I'm going to do is give you the name of a client that you can call and ask them about our level of percentage of accuracy.
Okay.
Okay, so there is no question that there is a risk to sell absolute.
Yep.
But as a practical matter, the risk is greater that you're going to spend advertising dollars unnecessarily. The cost of carry for financial institutions on a per monthly basis runs between 2 and 3%. So sometimes doing nothing is doing something. It's incurring an extreme expense for financial institutions.
Did you say 2 to 3% per month?
Yes.
So let me see my math. That's 24 to 36%. The value of the bank's property could go down in a year if they don't sell?
Oh, yes.
Okay.
Absolutely. And then the value and the cost of carry, which is the bank's cost of money, the opportunity cost,
mm-hmm.
the cost of insurance, the cost of the staff that's administering the asset, and the decline in the marketplace.
Which is a very key issue, whether it's an office building or industrial or residential, the value goes down and continues to go down besides the cost, because when you're not being used, you've got security problems, you've got vandalism, you've got the grass growing high, if it's residential, the pool going green, problems, and that's hard to catch up with and hard to maintain.
Absolutely. The problem, is so large for financial institutions, Fannie and Freddie, that here recently the Federal Reserve and Congress got in a little bit of a riff about the Reserve recommending certain things for Congress to do, which was not appreciated. So it is a major problem. The new REO and inventory in 2011 was something like 804,000 and change homes.
800,000 homes?
Yes.
Wow.
Now, this is not talking, about the other REO that's come in. So the problem is one of extreme significance, and I believe our economy, in order for it to get back going in the direction it needs to go, this just has to get resolved somehow.
Jerry, great interview, and you have great knowledge in this area. The analytics part of what you do for Rowell Auctions has really made them grow this last few years in an area for the banks, which has been very, very good. How do you get to Rowell Auctions, and how do people contact them about a real estate auction?
Well, I would go first to the website. 80% of the nation's populace that has internet access goes to the web first to look at real estate, according to NAR. It's actually closer to 90. Our web address is RowellAuctions.com, ROWELL, auctions with an S.com.
And quick, the 800 number for us.
800-323-8388.
Thank you so much. I appreciate your help, and thank you for being on a Friday afternoon.